Hey guys, Joe here from Charting Star. It's Saturday the 8th of April. Happy Easter first of all, and this is another Dax update. This is a Twitter post from the 20th of March. I gave you that falling bullish Wilbur wave wedge in combination with that RSI divergence. I think I even gave you my entry level, and this is just a few hours later. I also gave you that descending broadening wedge hint because we had that very intense impulse with that very long tail with that opening candle at the cash session, and this is just 10 days after that. We hit the first target line, we hit the second target line, and we hit the statistical target of that descending broadening wedge pattern on the dot. And by the way, I even gave you a perfect timing entry here. Once we had that sell-off on that Friday, I have to say that my indicators were all over the place, and I had so many mixed signals. I actually went long here, but I was getting out there already on the same day, and I missed that entire move. So yeah, I was a bit frustrated after I saw that, but that's how it is sometimes, and that's how it works. However, let's hop into the current charts. So what we have here is an hourly chart out of the cash session. In blue, you see that descending broadening wedge I just showed you with the green target box, and in red you see that rising bearish Wilbur wave wedge. And usually I don't like these bearish wedges if they occur at the bottom, which is the case here. But I mean, that thing is triggered with that higher high. We have like two overshots of that upper trend line twice, which is normal behavior, and have a closer look at the lower trend line. We have like two confirmations from March 24th. There's a fourth touch from Wednesday, and a fifth touch even occurred on last Thursday. So that lower trend line is playing an important role. Either bulls will use that to push higher again, and I think that will be the case on next Tuesday. If you have checked the futures indication, DAX was already at 15,700 on Good Friday. On Monday it will be closed again for the cash. Futures will be open. US markets will also be open during the cash, and DAX will reopen on Tuesday, by the way. And that's my plan, that we gap up and set another higher high, probably hit that upper trend line again, or even fill out that green box. And now listen carefully. I think, or that's my point of view, as soon as we break or push through that green box, the odds become less and less that that bearish wedge is actually firing to the downside. So in case we push up here, I'm looking more or less for an exhausting gap somewhere in that green box before we turn around and fire to the downside. Yeah, same hourly chart, but it's a JVD indication, so these price levels run all the time. I prefer to use my Elliott counting for that, and I haven't really changed the count since the last updates 10 days ago. So I still consider that first push as a wave 1, and that drop as wave 2. That was that low from March 24th. And we finished wave 3 on last Tuesday. And now the big question is wave 4 done already or not? Well, with that latest push on Friday, I would say, well, the odds actually are quite good that we run into that last wave 5. We are already in it. There's also a nice similarity between wave 2 and wave 4 because their time lengths are pretty much equal. Even wave 4 is the most trickiest of all. They usually are designed to kick out bears and bulls. I like to run in a sideways range in a triangle, and they do usually irrational moves, as I said, to kick everyone out. However, the targets I prefer are between 15.812 and 15.874. It could even run higher into 15.940 or even into that 16K area if they extend wave 5. Alright, folks, here's my 4-hour cycle chart out of the cache. And, well, let me start differently here, because I see a lot of guys using cycle brackets out of the sudden. These are these things you see here at the bottom. I can tell you one thing. I have studied cycle, or that cycle theory, for more than 5 years. And I did a lot, believe me, a lot of research, even on these smaller time frames. Even they look the same in length, they are not. Each individual bracket here got data, now listen carefully, data out of the last 10 years. And you probably have noticed on Twitter that I'm the only one who determines the time frame almost on every shorter cycle perfectly right. Even last Wednesday I called out a short-term cycle low. Yeah, but coming back to that chart, have a look what that model wants. That model wants a clear push above that last high. The last high is determined by that high here we had at cash was at 15.736, I believe. And that model is just telling us right now this push here should get us above that high. That means it could be 1 point, it could be 100 points, it could be 200 points. It's giving us not the price, it's giving us just it wants higher in a certain amount of time. That's about it. And on Wednesday I said, well, that cycle wants to have a low today. I said the same here, and I said the same here, by the way. And while talking about cycles, let's hop into the daily chart. And you can see a lot of numbers and letters down here. There's a lot of research in here as well. I won't explain now all of that, but what you need to know is for the longer term, there is usually a main cycle running between 15 weeks all the way up to 26 weeks at Dax. Every index got its own main cycles. They are actually made out of research over the last 40 to 50 years. The Dow Jones actually got even more data because it's the oldest index, by the way. Now, these main cycles, they consist out of smaller cycles. Either they are split up in half, so they consist out of 2 half primary cycles, or they are split up by 3 smaller cycles, which are called subcycles. The last one we had started in October, and this one was actually a perfect example of 2 half cycles forming 1 main cycle, which is we started in October, we found the half cycle bottom in just before Christmas in week 12, and then we finished that thing off in week 25. And that retracement we made was very bullish because we didn't even pull back to that 38.2 retracement. And now we started a new primary cycle on the 20th of March. And now the question is, I get asked a lot on Twitter, how do you know if that thing is bearish or bullish? The answer is right now, I don't know. I just can tell you my opinion because of my experience because I'm doing that for quite a while now. But how do I know the price levels? The cycle doesn't care about the price levels. The cycle only cares about time. So what do we do out of it? What we know is, and that is for Dax again only, if Dax is topping out within the first 5 weeks of a primary cycle, it tends to turn in bearish, which means it needs to drop below that starting point, which is at 14,480, and as soon as it does it, we have a confirmation that that entire cycle is going to be bearish, and we know there are lower targets waiting here in a certain amount of time. Now what happened is presently we topped out in week 3 at 15,741, and even we make a higher high next week sometime. That's what I think, by the way. But let's say if we do, and we top out in week 4 and we start to turn in, and DAX is not able to make new highs, or is, starting to show weakness, the odds are pretty good that we are turning into a bearish cycle, but the confirmation is only there if we drop below 14,480. But what do we know then? Once we drop below 14,480, we know that that cycle has a minimum length of 15 weeks. So the best case for the bears would be we drop down here, let's say in week 6 or 7, and we know we should hit a lower low within the next 8 weeks. That's how you use these cycles, or that's what they tell you on a longer period of time. And to give you a bit more information, that next cycle low is due at the beginning of June. And we are going to stay in the daily chart, and most of you who follow me for a while know this chart. Expanding flat. It's, by the way, still my buyers, as long as that negative divergence remains valid. That means, and that's, by the way, another reason why I would like to see another little squeeze for a higher high into that 850 area or 800 area, somewhere there, with another hit on that line. And then this divergence is a monster to the downside, actually. And that move to the downside could be even more intense than that thing we had in January in 2022 starting. That's just one thing to keep in mind. That expanded flat correction, by the way, to be 100% correct, it would die at 15,885 because then it exceeds that 161.8 extension level, and by the rules by an expanding flat, I probably need to recheck that, but technically it's becomes invalid as soon as it pops above that level. Having a quick look or quick jump into the weekly, I was showing that bearish hyper for quite a while, and I have to say, yes, we could drag that now all the way up here, and it's still within that red box. But I have to say, since that pattern is only a pullback pattern, so it only wants to see a certain retracement, and we pulled back, even we didn't get into that green box. We got somewhere in between the 23 and the 38.2 retracement from that high here we made in March. Beginning of March. This pattern is for me now completed. So I will take it out of my charts, and in case we drop further, I don't think it will be retracement like this. It will be something else, and yeah, that's a reason I take this one out of the charts. And this one here is the other weekly with that inverted shoulder head shoulder pattern. Don't get me wrong, I just keep coming up with this one, but it doesn't mean I believe in it. For me, it's still quite impossible, but as I mentioned that many times in my last video as well, it is a possibility. As things look like, especially after that drop here and we made that perfect touch, then we actually went below it, but we came all the way up again. You have to keep that in your mind as soon as we get close to that all-time high, that we get into that green box. But right now, I just leave it open for you, whatever you think about it. Yeah, and going back, hopping back into the daily cash chart, another nice thing actually happened on Thursday. We had another inside candle of that candle of Wednesday, and usually there is a pop. Even all these here failed. This one here actually caused a larger drop to the downside. But even if we get a little pop here, even if it's a faker again, that might be, one of these moves which jump out here quickly and reverse very fast. So yeah, keep these levels, marks these levels from 15,627 and down here we got 15,482. Those are low, and the high from last Wednesday are the levels to watch for Tuesday. And another very nice divergence which supports that RSI divergence out of the daily is a divergence we have with the VDAX, the volatility. First, have a look at that green divergence. I don't know if I gave you that in my last video, but in my last video, I think I gave you the Bollinger Bands for the VDAX, which worked out perfectly. Yeah, we got another pop to the upside, but then we reversed quite intense. And now we have that negative divergence, which is the red one. DAX keeps making slightly new highs, and the VDAX keeps making slightly higher lows. And this could build up even more, that we next week make another high and another higher low, and that divergence is building up even stronger. In one of my last updates, I mentioned the course index, and I said sometimes it becomes quite handy to look at this one here as well, because it doesn't consider the dividends. And right now we are in the period where all these companies are actually paying out these dividends, and the DAX Performance Index is considering them. The course index is not like every other index in the world. So in times like this, we just get different patterns, or we have different pictures actually in the chart. For example, this channel here. It's not a confirmed channel yet because there's another touch missing here on that upper boundary, but there are like 3-4 clean touches here on that lower trend. So let's call it a trend. And you don't really see that at the performance index, for example. And another useful tool I use are so-called runaway gaps. I mark them from the past, and the runaway gap, just how I define them is that a runaway gap for me is that it stays open for at least 2 months before it gets closed. And there were a lot of them in 2020 and 2021. And I want you to pay attention on a particular zone. You only see at the course index, you won't see that at the performance index. This blue area just marks that one day when that vaccine announcement was on the 9th of November in 2020. And I want you to pay attention, and we go a bit further back. What happened at these levels or in that zone? And you can see that zone kept playing an important role even the years before, even during that sell-off in March 2020. But what I want to show you is whenever that zone got hit after, we had quite large price movements associated with a lot of volume in either direction, and there was a lot of volatility actually involved. So the VDAX actually went up like crazy and volume spiked up like crazy as well. Let's check this one here. That was March last year. We had an extraordinary sell-off, and 3 days later they had an intense, I think that was a 10% rally. Excuse me. A few days later. The same here. Look at these large candles again here. Here were like smaller ones, but here they started to sell off in large portions again. And look what we had here. That was that CPI data push we had in November, by the way. And there are also a lot of a few guys, they say, oh, that gap here, that CPI push hasn't been closed yet by that latest sell-off or that sell-off. We're considering the course index, it actually closed. So just to mention that. And another thing to watch on is, or to watch at, is to keep an eye on that red zone. The performance index is somewhere up here. 1570, it's like, let me just measure it, hang on. Yeah, we just can just measure that quickly. So Dax is like, yeah, 4% away from its all-time high. And the course index, it will be much more. It's like 7.5%, or like 7.6%, something like that. So it's like there's like a 3.5% difference between these two. You can even visualize that better by looking at that red zone. Look where it topped out here, and have a look where that is. That is at 14,800, 15,000 area at the performance index. But Dax is already at 15.7 at these levels. So yeah, and also another funny thing to watch is that target line. Look how Dax is moving around that line and doesn't really can, push away from that. Yeah, that's about it. I hope you enjoyed this one and could use some of these informations I gave you. I wish you a happy Easter. Enjoy Easter Sunday, and yeah, I wish you all the best for next week. I will be quite busy next week, so I do most likely my updates in the evening. So yeah, have a great weekend and enjoy your holiday. Thanks for watching.